The euro has continued its bullish run against the US dollar, rising above the March high. Now the focus of market participants is on the Fed's decision on interest rates. Notably, the euro's recent gains stemmed from the steps aimed at stimulating the banking sector and restoring public confidence in the financial system. The greenback was weighed down by the latest decision to enhance the provision of liquidity through the standing US dollar swap line arrangements. Against this background, traders now are overwhelmingly pricing in that the Fed will raise interest rates only by 25 basis points. Alternatively, the regulator may pause its interest rate hikes to assess the economic outlook more carefully, though this scenario is unlikely. Nevertheless, a 25 basis point increase will hardly support the dollar. Last week, market players predicted the US central bank would accelerate the pace of its rate hikes to a 50 basis point increase at the next meeting. However, these expectations failed to drive the greenback up. On the contrary, the euro recouped early losses, hitting a one-month high. Thus, if the Fed takes a softer stance on rate hikes, the European currency will most likely extend gains, rising to at least 1.0801. Its further move will depend on the central bank's economic projections. At the same time, a rebound in demand for the dollar cannot be excluded. After all, the ECB lifted interest rates by 50 basis points last week, noting that it would stick to its aggressive path to fight inflation. Fed Chair Jerome Powell expressed a similar view. Therefore, today's meeting may well surprise the market. In addition to the Fed's interest rate decision to be followed by a press conference, today's macroeconomic calendar includes UK inflation data. The consumer price index is expected to decline to 9.9% year-on-year. On a monthly basis, British inflation is forecast to rise by 0.6%. If the indicators remain in double digits, the Bank of England will have to act aggressively at the meeting scheduled for tomorrow. Furthermore, ECB President Christine Lagarde, other ECB members, as well as Germany's Bundestag officials, are set to speak today. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar trading chart, it is worth focusing on the levels of 1.0758 and 1.0724. In case of a downward correction, a false breakout at these marks will create a strong buy signal, which will help the euro advance to 1.0801. If the price breaks through this level and tests it from the top down, the volume of long positions will increase further. In this case, the European currency will have a chance of rising to 1.0834 and probably 1.0873. At the level of 1.0873, I recommend going short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0801 and 1.0834 can be considered only amid a false breakout. Meanwhile, the British pound entered a downward correction but managed to quickly erase losses. This means that market sentiment remains bullish. For the time being, the pound-dollar pair is trading at around 1.2232. The most likely scenario suggests a decline to 1.2181. A false breakout at this level will make it possible to go long. Long positions on a rebound will be relevant at 1.2134 with a view to an intraday correction of 35-40 pips. If the pound sterling rises above 1.2232 and tests it from the top down, traders are recommended to open long positions in the hope of a jump to 1.2278. A false breakout at this mark will generate a sell signal and bring the British pound back to 1.2232, the middle of the range. Alternatively, short positions on rebound can be considered at the levels of 1.2329 or 1.2388. In this case, one can count on an intraday correction of 35-40 pips. Best of luck!